Hello. So here we are with the Meta today reaching approximately $460. It looks like pre-market right now as the stock had its earnings report and it skyrocketed. It's up about 17%. And I'm really glad to see that because I have obviously bought Meta some time ago. It's been a few years now when I bought it during the Cambridge Analytica scandal actually. And I have always been a proponent of buying this one. I have mentioned it multiple times in my videos that it was a fantastic opportunity. And you can see it pretty much becoming a thing right now and fulfilling the prophecy. Now, if we take a look at what has been happening with Meta, for instance, the past year, basically, see that it has been absolutely on a tear here, going higher and higher pretty much through the year. We had the issues earlier with the metaverse, the spending and all that. I have always been telling you that it's not about the spending, it's about the cash flow, how much the company generates. We have done a lot of discounted cash flow modeling here to discover how much the company is worth, and it was obviously much undervalued, and this is why I was an advocate of buying it. Now, if you take it back even further, like 5 years, you will see that it had a dip over here, a massive dip. And I was urging people to buy and buy and buy because I thought it was a fantastic opportunity. So in my videos, it was definitely a buy. And I have bought Meta at about 158, I believe, dollars was my entry price. And I'm happy that a lot of the subscribers and people who are actually following the channel basically have bought the stock and made some good money so far. But as I've also mentioned in the past, the stock that keeps going higher usually will be on this kind of tear for a while. So you usually do not get you get some interrupts, like for sure it's gonna be some down days, some negative days for sure. Even a week could be negative or even more. But overall, you are looking for higher highs. And you are looking for reaching higher pretty much tops through the years and through the months. And as you see here, this is exactly what has been happening. So there has been a low here, but then again the top was here. Then there was a low here, but then the top was here. So it's like higher highs. And then this is another thing that you see here, sort of like a basing pattern where the stock consolidates a little bit because there's like a battle between buyers and sellers. You see that a lot. You see that very often, and it's usually a positive sign unless the stock obviously goes down abruptly. But usually it's a positive sign. Now, this is about the technicals, but obviously the more important thing and the thing that we care about as pretty much fundamental traders or fundamental investors, I should say, is what the company is doing in the long term. And for this, we're going to first examine what happened in the earnings report. And Meta shares jumped 14%, right now it's almost 16 to 17% actually, after profit triples and company announces first ever dividend. And again, we had hints of that in the previous years. The metaverse spending is temporary. We knew that would happen, and the profit that the company had, I have always been telling you, they're making tons of money. They're almost like a bank, and you would see videos around mentioning that the company is a fail and all this nonsense. And right now, it eventually always stabilizes, and I'm pretty sure something similar will eventually happen with a company like Alibaba, which is in a similar pattern. Apart from the fact that they are in China, and this is what's holding them back for a while, potentially still. We'll see about this one, but Meta has definitely jumped back. Now, they're better than expected results and the first ever dividend payment, so they're gonna be paying dividends as well, which is not a thing that I like a lot, because it indicates a couple of things. Usually when a company pays dividends, they don't foresee too much growth for the future. And that's something that is not that positive, generally speaking. Now, that's not a certainty. They could just be wanting to get new investors in and actually, give some money back to their shareholders. That's normal. A company like Apple did that as well. As long as the dividend is low, I'm fine with it. Like Apple's is almost like 1% or so. If it stays near this range, I'm fine with it. But if it goes to like 3 and 4%, I would potentially even looking to offload the company as a holder. I don't like that many dividends, that much of a percentage. I think that's a lot of cash flow extraction, and I'm not a big fan of it. Now, the results show Meta's online and business continue to rebound from a brutal 2022. Yes, we know that. And sales in the fourth quarter jumped 25% year over year. 25%, that's massive. while expenses decreased 8% year over year. This is honey to my ears, as we say here in Greece, is an expression. And it's basically something that's lovely to see. Jumping that high and expenses decreasing is exactly what an investor would look for. Now, and I should say music to my ears, right, is the correct, the correct English expression. Now, Meta beat on earnings and revenue in its fourth quarter earnings report Thursday and announced its first ever dividend payment, and the stock soared. Now, earnings per share $5.33 versus $4.96 expected, and revenue of 40 billion versus 39 billion expected, with daily active users growing as well. And how could you even grow at such high user base? Still happening though. Monthly active users also growing, and average revenue per user, which is super important, growing too, with revenue jumping 25% in this quarter from 32.2 billion a year earlier, which is great to see. And net income more than tripled to 14 billion. Again, that's something that I mentioned in the past. When companies do badly in a quarter or in a year, because of the conditions, the market conditions, or because of the sentiment, which has been a big case here for Meta, eventually when net income rebounds and when the market conditions overall rebound, when the sentiment rebounds too, you can get massive moves in upwards, basically. And this is what happened here with Meta. And frankly, it could continue happening for a while, because again, the trend is your friend, basically, is what we say when we're stock trading. And trends are strong things, and they can go on for a while. And you could easily see, again, what I mentioned earlier, a trend breaking for a little while, like the company's stock going down for a few days and then ripping up again upwards, because there's a lot of potential buyers. There's a lot of people wanting to get in on the stock, and they are waiting for the slightest miss. So if it goes down a little bit, they basically jump aboard. And this is why these kinds of companies and these kinds of stocks that have been on a tear tend to stay on a tear unless something drastically changes, because there are many people wanting to buy it. And also, when a company is at all-time highs, it may seem like it's not a great buy, and it could be the case. However, if you are trading it, it's a potentially interesting buy because there is no resistance in the upwards scale. Like, there's not many people waiting to sell. There's not many backholders. There are not any backholders because nobody has bought at a higher price. And so this is an advantage for traders there. This is why you see explosive movements to the upwards side quite a lot in many situations. Now, Meta said it will pay investors a dividend of 50 cents a share on March 26, and that comes after cash and equivalents swelled to 65, almost 66 billion. Fantastic. And the company also announced a $50 billion share buyback, and obviously in the previous few months, it was a fantastic opportunity for anybody to have held the stock and have bought some stock there. Because this could I could definitely see this continuing its upwards movement. Now, that doesn't mean it's a buy today or it's it's a great opportunity here. We're going to examine that a little bit later just to verify. And you can see here the Meta quarterly revenue growth as it's happening, and again see what has been happening in the previous few quarters. Expected, we knew about it, and the moment it rebounds, you get these frantic movements, and that's nice to see. Pretty great to see here. And so Meta will continue to invest in AI, which is much better than something like the metaverse, which I always thought it was a massive fail. But again, who cares about it? Yeah, they spent money, but it's not about the money that you spend. It's basically about the money that you make. Is what business is all about. You can have this kind of spending and drop the stock for a while, but I see this as an opportunity for buying, frankly, as long as the company keeps making the money that they are making. Is the most important thing of all. And just to quickly finish this video, we're going to be taking a look at the discounted cash flow model now that things have massively changed for Meta, and we are heading upwards, significantly upwards, with higher revenue growth here, which could potentially continue since the company has been suffering in the previous couple of quarters or so. And we will go with a revenue growth that is going to be, like the 5-year average was about 15%. We're going to go less because we always want to be a little bit, we don't want to be overconfident. We always want to be less aggressive than what most people would do. And we want to see if the company, for instance, would grow like 6% or 8% or 10% a year, not 19. What would happen is, would this be a buy? And in the previous months, it was an obvious buy. So yeah, in the previous months it was an obvious buy, but right now at its current price, it may be expensive. And this is exactly what the tool here will tell us at myinvestorsheaven.com. Remember that all our patrons have access, by the way, if you're interested. Now, net income margin that the company has been usually having is about 30%. Remember, software company ads pretty much, they are going to be having high margins, are going to be making more than the usual on the dollar, more than, for instance, a brick and mortar store, much more, significantly more, because there is a higher profit threshold, lower expenses, for instance, and you make more money. This is great. And the net income margins that we're going to go for, again, we're going to be a little bit more conservative, go 25%, 27 and 29 here. And again, you can try your own projections and go even lower if you want to, but it may be a little bit, a little bit too much to go lower. And free cash flow margin that we're going to be using, fairly typical, 80% to 90% is what Meta is doing here. And so 99%, this is exactly what you want to be seeing out of companies. 80, 90 to 100 is about what you want to be seeing. So I'm going to go 80, 90 and 100. An annual return, 13% is what I like to use. It's a good return and better than an ETF. And I'm going to hit calculate. And as I'm hitting calculate here, you will see that our current price is actually sitting at 450 because the market hasn't opened yet. And with these kinds of projections, we're looking at Meta being overpriced already. So it used to be a massive buy earlier when it was sitting at 100, 150, 70. But right now, as it's approaching 450, I know that you may be having fear of missing out. A lot of people would do that, but you may have missed out already. And so buying right now becomes a little bit riskier. And you can kind of see it in the metrics here. The P ratio, the price to free cash flow have skyrocketed. So right now, this could be a time of selling, frankly. And I know that it may sound weird from me to say that, being a proponent of Meta for a while. But frankly, I'm not so much into any companies. I don't get stuck with any companies. I get stuck with numbers. So what I'm seeing here, the numbers that I'm seeing, point to a company that could potentially, if you own stock, be sold or you want to sell. Now, as we're getting to $450, this is probably going to around 40 or so. The price to free cash flow will also skyrocket to about, 58 or something. So you have to be careful here. Now, could this run continue? I think it will, actually. I think it will, because that's what happens with trends. I wouldn't be surprised if this one reaches $500 very quickly, actually. It wouldn't surprise me at all. But in the long run, as things, die down a little bit, as the whole, frantic movements are going to be dissipating, you maybe see this one creeping down. Now, again, this is not a given because the stock market can be can go down, up and down in any unexpected manner, frankly, for a while, just because it's a market of sentiment. The market does that. And you, as I mentioned in the past, you want to be buying when the sentiment is negative and the money that the company generates is positive, very, very positive compared to the sentiment. Has been happening for a while with Meta. Right now, I think we're at the point where the company is overvalued. So I would probably avoid buying shares today, unless you are trading, because you could see explosive movements to the upside. But again, in regards to the fundamentals, this is getting expensive here. So if I would be looking to add for my long-term investments here, I would want to add on a pullback, potentially on a pretty healthy pullback. So this right now is a company that I would probably not buy more stock for today, is what I'm saying. But do let me know what you think about Meta, and do let me know how much you have been up on Meta. I've been up quite some. I have sold some, but I still hold about 50 shares, and I'm up a lot. Buying back when it was 158 or so, and yeah, it's nice. So thanks for watching, and I'll see you in the next video. Bye bye for now.